Alright, hello everyone, welcome back to my channel. This is Emil. On this channel, I mostly talk about investing and investing in the stock market. Today's video, I'm going to be focusing on the coronavirus and some stocks, three stocks that have been really heavily affected due to this virus, to this horrible illness, um, but that I believe in the long term will do very, very well and have been brought down to some crazy low prices because of this illness. Um, so the coronavirus, no one really knows how severe it will get or how long will it last, but uh, the estimates are within anywhere from another month or two. It's currently March 2020 to a year, and how long this ensuing recession will last could be just a quick bear market dip, or it could also be a year or two. So we've got to prepare for either of those scenarios. So to best profit from this um, illness, what I would suggest is if you're looking into buying any stocks, particularly these ones, these are going to be heavily affected by this coronavirus. So if you want to buy them, make sure not to buy it all right now because the price can and probably will continue to decline in the short term. And by short term, I mean this year, not the next few days, but probably that as well. But if I were you, I would dollar cost average my buys over the next few months with all of these stocks. All right, let's get straight into the first stock. First stock is Boeing stock. So I think you may have heard of Boeing. So we're mostly going to go through the financials of these few companies rather than going too much into detail of what the company outlook is as much, like I usually do. But yeah, so Boeing stock, they're the market leader in airplane manufacturing. Um, as you can see, Boeing has been doing pretty poorly in the last few years, well, the last couple of years. That's because their 737, their best-selling aircraft, had to be grounded. A lot of them had to be grounded because there was a good few accidents um, with those airplanes. So a lot of them, yeah, they had crashes. So obviously, people stopped buying Boeing those particular planes because there's a problem with them, which has really hit their stock price. And then to add to that, obviously the coronavirus, no one's traveling for the next year, so no airline company is going to be buying new planes or anything like that. So it's really bad for Boeing in the short term. So if you're buying Boeing stock now, you're buying it at the same price it was in 2016, so for 4 years ago. So we'll look at the rest of its financials. So yeah, you can see all here. This is the coronavirus drop. So it's dropped from like here, all this short term negativity here. This was like no growth. This was all because of the 737. And then this drop right here, this is coronavirus. So it's taken it from max $439 a share to $129. That's a crazy drop, guys. That's a huge drop. 23% just today. Well, yesterday. The stock market is due to open in 3 hours when I'm recording this video. Um, so yeah, it's now making a loss because no one's buying their flights. Yeah, just to go through their balance sheet. Their balance sheet isn't great, to be honest. That they have 10 billion in cash, which is decent, but when you compare it to their current liabilities, that's the biggest drawback for me. They have 97 billion in current liabilities, which is a hell of a lot. Let's go full screen just to make this nicer. Current side. So yeah, they have 10 billion on their balance sheet in cash, so they can survive another couple of years. Um, and then they have 130 billion in assets. So those assets are their planes. Yeah, so they have a lot of planes just sitting there ready to be sold. So that's what those assets are there. Uh, so yeah, 10 billion. Maybe that lasts them a year. But yeah, this is really worrying. So this is the most worrying thing about Boeing stock for me. So 140 in total liabilities. So I just wanted to point out that their revenue in 2016 and 2018 was growing right around the $100 billion. So currently their market cap's 73 billion thereabouts. So 100 billion, that gives them a net uh, price to sales ratio, current price to sales ratio uh, of less than one. So that's pretty good when considering a price to sales ratio. Um, so I just said that this is once the Boeing 737 is good to fly again and it's all safe and the coronavirus has passed, this 100 billion will probably be the likely minimum that they'll start generating again. So that's the way I'm looking at it. I'm looking at it from a 1 to 2 year minimum perspective. In the short term, anything can happen. They're not going to make any good money. So it's don't be looking for dividends. This is a long term play. Uh, so yeah, they're still the market leader in developing airplanes, and the number of kilometers traveled every year is still exponentially growing. I know this is only up to 2016. Like there may be a little bit of a bump here, but it's still going to shoot up. It's still going to increase, and it's still in the exponential phase. So there's going to be more demand for planes in the future. So I just wanted to point that out. I couldn't find a more up to date graph, but I did see some others that were up to 2018 that they weren't as pretty, but they uh, they showed that growth is still continuing in this fashion. So 10 billion earnings in 27 and 2018, the same ones where they got 100 billion in revenue. So that gives them a current PE of 7 thereabouts, which is really low. And their old price to earnings ratio, and price to earnings is the stock price compared to the amount of earnings, and earnings being profit. So the lower the price to earnings, usually the better. And their price to earnings ratio was 7. So you're getting at a cheaper price when in the past it's been 30 to 40. And that's like their actual price to earnings was 30 to 40 at those times. So you're getting it really cheap right now. They they're basically getting a lot of cancellations at the moment because of the coronavirus and the 737. Yeah, they have a dividend now. It's increased to 5%, over 5%. It could, I, I said likely to be cut, but I'm just being a bit pessimistic because it wasn't actually cut during the recession. However, yeah, people were getting less flights during the recession, but it wasn't as big of an impact on travel as this current situation is between both between both the coronavirus and the 737. So I'd say yeah, probably this dividend will be cut in one or two in the in this year. Maybe the next year will stay low, but um after that they'll probably raise this dividend back to this amount and start growing it from there. So if you're growing it now, in a couple of years, I reckon you'll be getting a 5% on your investment just in dividends, and you'll also get some capital appreciation. So in the short term, it's a very risky purchase right now. I don't think it's going to go bankrupt, but um, the stock price could definitely fall another, I don't know, 50% in the next year. Who knows? Like uh, it could really keep on dropping. So don't if you want to buy some, get a share at a time. Just bam over the next few months. Get a nice low average price for your buys, and in a few years you'll be very happy, even if it returns to its previous stock price. So we know it can at least be that expensive. We know it can be that price. If it's done in the past, it can do it before. Like people believe in that company that much. So it's a risk in the short term, but in the long term, it could be a very good investment. Okay, yeah, and that's just mentioning that they don't only make airplanes; they also make spacecraft, and um, they make airplanes for uh, the Air Force in America, and they even make the what's it called Air Force One, the president's plane. So they're making the next president's plane. Them making some space stuff, which is pretty cool. Yeah, there's also a couple of problems with their space, uh, some of their space things, but yeah, we won't get into that right now. It's just not as big a part of their business. Okay, let's move on to the next company. I hope you've heard of all of these companies. This one has been another one that's been absolutely decimated in the last couple of months because of the coronavirus mostly. It was kind of getting dragged down a little bit before the coronavirus, but then once coronavirus, like once that really started to take off, this stock has been destroyed. And I had just bought it just before the coronavirus. Yeah, you can't predict these things, and yeah, it was unlucky that I've lost 60% in this stock. So, but if I was willing to pay the price that I paid for it then, I'm definitely willing to pay the price that it's currently sitting at. So, yeah, so Carnival Corporation, they're a cruise ship uh, company, so they have all these brands. You might recognize some of them. So they do cruises for people, mostly older people, and they own a ton of different brands all around the world. So let's just go through some of the financials. The stock price has dropped 80% from its all-time high. You have to go back to when I was born in 1996 to have that same price, which is crazy. That is crazy. The dividend is 14% now, but like it's not going to stay 14% at, at because yeah, Carnival, all the cruises have been shut down for the year, and Carnival are going to make a net loss. They'll probably pay some sort of dividend so they can say that they did pay a dividend for this long, but it won't be grown. It'll probably be cut. Um, yeah, their price to earnings ratio is 3.3. That's like one of the lowest price to earnings ratios I've ever seen. But yeah, there's going to be no earnings this year. Pretty much, they're going to make a loss. Yeah, there's going to be no earnings, so they're going to make a loss. So that's why it's so low. Um, yeah, they don't have much cash to survive. But again, they are similar to the Boeing. They have a lot of assets, being their ships. Uh, Current liabilities 9 billion, so that's not a good ratio there. The cash to current liabilities, um, but at least their assets to debt is similar. Um, Jeremy from the Financial Education Channel uh, had a good point about this stock. Like, and similarly with Boeing, they owe a lot of cash. So if banks want to see that cash returned to them, they're gonna have to continue to loan Carnival Cruise more money so Carnival Cruise can survive as well as with Boeing. It's unlikely that it will go bankrupt um, because of that fact that banks want to get this 9 billion back, so they're happy to keep lending them a few, maybe even up to a billion, just to get them through this, or a few 100 million to get them through this tough year, maybe 2 years, because they know in the future Carnival Cruise will still, they have all those brands, they're the market leader in cruises, so they'll come back and be able to start making a great amount of money again, just like they were. So yeah, Carnival Cruise, if you go to their website, this they say straight out because of the coronavirus, they're halting all their cruises and they're going to make a loss this year. So this is just their dividend history. So you can see their dividends grown. So I think they can try and keep it very in line with their earnings. So yeah, in 2009 they had a bad year. They cut their dividend a lot. They have one crazy quarter there. Then they start growing it again. So yeah, what we're likely to see, maybe dividend drop back down to these levels. Then after a year or two, gonna drop straight back. Well, jump maybe up to here if the past is going to tell us anything. So in a few years, you're probably looking at a yield of like 7%. on your current investment, I'd say, if the dividend goes back up to here, let's say in 2022. Now, for my final stock, I'm going to do the first two stocks were pretty risky stocks, uh, during this time, and they've both have a very high chance of continuing to fall in the short term and continuing to fall by a large amount. So I highly recommend you proceed with caution if you're interested in purchasing some of these stocks. So one of those two stocks. The next one's a lot safer, and I believe it has also been hammered in the last couple of years, also due to two factors, one being declining sales and the other being the coronavirus. The coronavirus is taking every single stock down, but the first two have been particularly decimated directly because of corona. This one less so directly because of the corona, but definitely still affected. And the company is 3M. So 3M, if you haven't heard of them, they make pretty much everything. So they literally have millions of products and patents. So I'll just go show you their website just so you can have an idea of the kind of things they make. Okay, so yeah, like products for business. Look at all these categories. These are categories. Products. 1,400 different abrasives. Just so you can get an idea of the amount of products that they have. So this is, and they have these kind of things. They have post-it notes, or the consumer ones that you might know. But yeah, anything for manufacturing, it's all made by 3M. 3M, yeah. So here, yeah, thousands more products that you might recognize. But that's the kind of products that they make. 3M pump millions and hundreds of millions into research and development. So they're always coming up with new patents and products. And they also acquire loads of smaller companies that are like have a good idea or good products or are generally a good business. So they keep growing like that and keep having more and better products. So that's how they've come to have so many popular products. And yeah, I should mention that they're extremely diversified, spelt incorrectly. Yeah, they're diversified diversified across healthcare, industry, manufacturing, consumer goods. So a very safe stock, especially with their current price. Yes, it could continue falling, but yeah, you're not going to get huge dramatic falls very fast. So yeah, you can get this at a nice low price over the next while. I don't think this stock is going to go out of business, or this company is going to go out of business anytime soon. But yeah, their sales have been declining, and they're set to the growth is dropping. Uh, so yeah, they're kind of flattening out and even going down a bit because yeah, industry as a whole is kind of slowing down. Coming in, it seems like we're coming into a recession, so industry is kind of slowing down. So these kind of products aren't needed as much. And the price to earnings ratio is 16, which is pretty good. But I wouldn't really be this stock is more of a dividend growth player than capital appreciation. Although at this price, I believe in a few years the stock price will be worth more than it is now, um, and the dividend will 100% not be cut. So whatever dividend percent that you're getting now is almost guaranteed that the dividend will be increased in the next few years, and that is because 3M is a dividend king, which means it has increased its dividend for 50 years. So this is just a 30-year history. So whatever you were getting in dividends 30 years ago, you're getting 10 times that now for the same initial purchase. And they've increased their dividends for 50 years. Sorry, 61 years. To be deemed a dividend king is 50 years. So there's very few of them. And 3M is one. So they're going to really want to continue being a dividend king. So if they don't increase their dividend, they'll lose that title, so they're going to keep continuing to increase their dividend. So let's just have a look at their chart. So as you can see, in 5 years, they haven't moved. Like they haven't really moved. So you have to go back to 2013 to get the same stock price that you're getting today. So yeah, all this decline is due to just declining sales. So yeah, their sales aren't looking as strong at the moment. So I wouldn't rush into buying this stock. And this drop from 180 to 130 is coronavirus. Yeah, it's from January. And so yeah, this stock could continue to fall, maybe to even $100. I couldn't really see it going too much further too fast. But yeah, I'd also, if you want to get this stock, also consider dollar cost averaging. Um, yeah, so that's all the stocks I wanted to go through for today's video. If there's any more stocks that you'd like me to talk about in the future, please let me know in the comments. Yeah, thanks a million for watching. I hope you enjoyed the video. And if you did, I'd really appreciate it if you could drop a like. I'm just starting out, so that would be extremely appreciated. And if you enjoyed the video and want to see similar ones in the future, please subscribe and cheers. I'll see you in the next one. Bye.